And then eventually later this decade, I do think we have a depression. So I think that the Fed, they're meeting later in July, I believe, towards the end of the month. They'll tighten by another 50, maybe 75 basis points. I think they're trying to kind of front load because they know the economy is going to come to a screeching halt. I think that they're trying to bring inflation down with all their might. But my guess is, yes, it will come in, but they're basically going to force the US into a recession. And that mainly could mean that you see the whole world enter into a recession as well. So that's my biggest fear here, is that the Fed has always played from behind, right? They played from behind in 2008, 2009, not starting any sort of quantitative easing until 2009. And even in COVID, they kind of were a little late there. But when they came in, they came gangbusters in. They always have a tendency to go too hard and be late. So they're trying to play catch up. And I think that this is that situation where, yes, I think interest rates need to go up, but doing it this quickly, you are sending a shock, especially when commodity prices are already hurting the market. Inflation is already hurting the consumer. Now you're basically causing the housing market here in the US to come to a screeching halt and start to decline, many, many other things. So my only concern is that they're doing it too quickly to try to get back in front of the situation, and that could ultimately cause a recession. So I think that my guess is that you're not going to see price, right? So prices tend to be sticky, and this is the same for wages, for prices. I mean, gasoline comes down, we know that with oil, but notice how, again, when oil goes up $10, prices go up really quickly at the pump. When it drops 10, it goes down really slowly, right?
Yeah, funny about that.
My fear is that a lot of the prices that people are seeing in the stores will stay. Now, maybe they don't go up much, maybe only just a few percentage, 4 or 5% a year, but that's going to put a lot of people in a hard position where, unless they're making more money, they're going to be struggling. So I do worry that there's certain areas of the population that are going to feel like it's a depression. But I also think that it probably won't be a true depression for at least 5 years or so. So I think the Fed is going to play this kind of back and forth game where, as we slip into recession, they're going to start to cut rates again and start to print money again. Then inflation is going to surge again. Then they're going to have to raise rates again. And then that's going to slow the economy. And it's going to be this back and forth, kind of this, which one's the worst scenario for us? Let's attack that one. And then eventually later this decade, I do think we have a depression. Yes, I mean, basically, I'm looking at the 100-year cycle, noticing how again, we had COVID with the Spanish flu, about the 100-year cycle, and it does tell us that something's coming. And you can almost see the writing on the wall, right? I mean, all of these things that have been done, this financial maneuvering by all central banks, I mean, all of us know it's not going to end well. It's just, when is that timing where everything just kind of falls apart? Yeah, so I think the best thing to do is just to be cautious. For me, it's a swing traders market, which, you're right, not everyone can do that. Not everyone feels comfortable doing that. Yeah. But I do think there are opportunities. Like, I know we're going to talk about gold. Maybe we can use this to branch into gold. But I continue to be a huge fan of gold. And then when Bitcoin gets into the kind of the teens, the low teens, maybe even the single digits, I do think that is a buying opportunity where, as the market starts to realize that the Fed is always going to come back with their same game plan every time we slip into recession and print more money, I do think Bitcoin has that place and could be the massive up mover, like I showed on that Amazon chart. But again, gold is such a great play right now. Most people aren't really fully, like, you look at the gold chart, and I hope you don't mind that I'm kind of taking us in this direction.
Go for it.
But if you look at the gold chart, a lot of people are like, oh, gold stinks. It hasn't even moved all year. You know, we're basically hovering at the same level we were at the start of the year, which was right over here, right? So, I mean, maybe we're up 1% or 2% on gold, but this is only one small portion of the deal here. Number one, Bitcoin's down over 50% since the start of the year, maybe even more. Number two, the equity markets, the S&P's down over 20%, NASDAQ is down over 30%. So now you're in an asset where it's been holding steady. And not only that, but usually in a market where the dollar soars, gold gets smoked, but gold has been rocking here. Take a look at the DXY, the move from the beginning of the year. Here's the beginning of the year, and look at the dollar. The fact that gold is still even flat to positive when the dollar has soared is hugely bullish, right? And then the other side of the coin, and you know this too, Carrie, is that when yields start to go up, usually usually gold also gets pounded. And look at yields since the start of the year. We're basically up over 100% on yields. and gold has still held strong. So again, it's not flashy, it's not sexy, but gold has been rocking it this year. And what it tells me is that when the dollar finally starts to decline, or when yields continue to pull back, you could see a major move up in gold.